Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is Monday. Let's remember, hold on. Let's get the music first. Remember that we had a non-farms jobs on Friday, and that was quite some, I want to say, confusing action. I guess it wasn't necessarily confusing, but there was some things about it that I felt were a little bit unexpected. So I think that the market is probably still going to be digesting that. And then we got more tariff stuff, this time with Donald Trump putting tariffs on steel imports and retaliatory tariffs. So I would expect at some time today, and it may be this morning while we're trading here, that we're going to get more Donald Trump talking and the volatility that comes with that. So let's come over to the charts and see what they've been doing overnight, if they've made any significant moves since the updates that I've looked at here. All right, so here's the treasury. You can see there was a huge spike up and then a huge spike down, and we're pretty flat since then. The treasuries haven't done much of anything. S&P 500, oh, okay, that's interesting. They opened lower and recovered it. I did kind of hear that, but it's bigger than I thought. And they are on the upside, so equities seem to be taking this okay so far. Oil rising a little bit. I don't know if there's anything going on there. I believe that peace talks in the Middle East have been delayed a little bit. Like they say that because Netanyahu came to the U.S. and all that sort of stuff, that it's kind of been delayed a bit. But they're still doing it. Gold and silver. Oh my, gold just absolutely blasting up to new highs. I really wonder here with gold, the whole situation on the exchange and everything else, like you could have a real mania starting to, regardless of what happens with tariffs and inflation and everything else. Oh, that's right. We do have inflation numbers this week too, don't we? Have to worry about that. What about silver? Okay, so silver's not spiking as high as gold. It is. I think that this situation is a gold-specific situation, so while we would see some correlation with silver, it doesn't look like it is following as closely. Kappa's really going. Ooh, man. Okay. And Japanese yen, okay. They're kind of chilling out, but I'm happy with that. As long as we're not like constantly making new lows in the Japanese yen, I think we're okay. And Bitcoin backing off the 100,000 today. I don't know, man. I mean, that's a pretty good channel. I'm sure that the TA guys are sitting here looking at this going like, oh yeah, here's the thing. And then it's going to go badoosh, right? But I kind of felt like it would have done that by now. I don't know. Anybody's guess, right? Because it really all just depends on how Michael Saylor is feeling today. I was reading something about gold reserves for delivery on futures contract. Yes. So the basic gist of it is that on the London Metal Exchange, they do not have enough gold relative to the number of contracts that are out there to deliver. So like something has gone very, very wrong over there, and there is not enough gold. So, and this kind of plays into, because I'm not saying that what's going on is a conspiracy theory, but I'm just trying to give some color to the situation, like some context to the situation, that people are always saying that there's more paper gold out there than there is real gold. And that if the markets realized how little real gold there was out there, that there would be like a huge increase, right? So what's happening on the London Metal Exchange and others is not necessarily that, but it certainly plays into that narrative. I have not seen like the wider investing public talking about this, but I am kind of looking at this like this doesn't go very much further before the public gets involved and it gets really crazy. So I'm definitely keeping an eye on that situation. I think if I had more gambling money, I would put a little bit of it on gold futures. But I think one of the issues in a situation like that, though, is that when it's over, it probably falls really quickly, too. That's kind of the thing that I've noticed when the metals are going crazy. And granted, we have not seen this while I've been streaming, so like the last 8 years or whatever. But I can remember some times early on, like when silver went to 50 and times like that. You got to remember that commodities do not really make very good long-term investments. They really are trades. And when you're getting a run like that, when they end very quickly. So I think I need to drink a little bit more. I got some drainage coming in and it's not really draining very well. I better check on our video too. We were going to release a video today, but I hadn't heard anything. So you know what? I'm noticing something happen in the day trading community that is really interesting. And when I say what it is, you're going to be like, okay, that's a development. Like what? But I'm telling you, in the past week, the conversation in the day trading subreddits has changed. And I think part of it is because there are some guys on TikTok that are getting popular. And I'm actually really excited about this. So the change that I'm seeing is that a lot of people are all of a sudden asking the question, is it really possible to make money from day trading? Like, it's just like the question they ask is straight up, you can't make money from day trading. So there's this kid. Oh, I wish I could remember his name. Maybe I should go and find it. Oh, except for that, I don't know if I can find it. Because I don't think I followed him. Did I follow him? I should have. Let's see if I had a comment or something. No. Well, anyways. This kid was going right after the whole ICT sort of thing specifically. But I think part of my problem on TikTok is maybe I'm just too old. It seems like you got to be old. I need to have some sort of like something I can wear or something about me that's super distinctive and everybody remembers you for. You know what I mean? But I don't have that. It's just a bald old white guy. They're not interested in that, right? But there's this kid. He does a good job, and he sounds like he went to an Ivy League school to learn finance stuff. Is it Justin? I don't know. He has curly hair. Oh, you know, I bet I could find it on Reddit because one of his TikToks was like on the Reddit subreddit. No, I don't think it's just that didn't pull anything up at least. Let's see here if I can find it. Maybe if I change this to top from past this week, perhaps. Oh my gosh, like the top post in the past week on r/day trading is here's the setup, and the setup like matched what he had drawn almost exactly. Maybe won't show up in top because no. Maybe if I go back and I say top, can I change it to top comments? Oh, maybe not. You used to be able to do that. Gosh dang it, Reddit. Well, anyways, this kid, his assertion is basically day trading is not profitable. Like long term, day trading is not profitable, and he takes it from two directions. One direction is look, they've done studies on this, right? The vast majority of retail day traders are not profitable, and everything where I've seen it, it's worse in futures. I think if you're trading stocks, there's kind of like this propensity for stocks to always go up, so you can kind of make it for a certain amount of time in stocks. But in futures, like the majority of day traders in futures just get slaughtered. It is just straight up the statistics. It's like 90%, right? We all know that. I think most of people here on this stream at least would know that. But he also kind of takes it from a mathematical perspective. He's more into options. And he kind of goes into the, with the way that the Brownian motion works, you basically, you don't have a, if you're taking outright positions, there's no way to account for the noise in there. So, the results that you get are mostly random. And he's correct. Like when you go and you look at it from the mathematical perspective, it's the day trading thing is not profitable. The only place where I would say he's wrong is that he does not consider the informed trader, right? Like he talks about, like Nancy Pelosi is a good trader, like Congress is a good trader. Well, you can try to be that. And I think if you're day trading, that's the approach that you have to have. Like the technicals, and I guess we're going to call the order flow technicals in this case, although I don't really like that kind of word because technical analysis as it is traditionally practiced is nonsense, okay? But things like the order flow, things like looking at momentum on daily charts, positioning models, things like those can all help. Those can all help, but I really believe in the long run that if you can have an edge as a retail trader, that you have to know things about the market too. You have to be like the informed trader in some situations, but it's just weird to me how all of the sudden they're questioning it, and I think that's a good thing. I mean, the issue is that in order for the market to work, there needs to be a certain amount of noise. There needs to be a certain amount of people trading. So like less retail day traders is not a good thing for the market. And I kind of wonder if at some point, if people kind of turn off to it, if they don't start doing, let's change things because we need the people to come, I would wager the more successful in the day trading. Well, except for that, then at that point, you're not really day trading, right? I suppose that there's like people that hold trades for a couple of hours instead of a couple of minutes. Have you held from Friday trade? Oh, you know what? I didn't really take the Friday trade that seriously, to be honest with you. I was kind of thinking about it because if I had not lost my job, I think that I probably would be in a place where I would be taking on a little bit more risk. And I would hope that I would have been smart enough to not really take a lot of risk on that non-farms. Like I've had many situations like that on a non-farms where it seems like it's a significant non-farms. It seems like there's a place to make some trades on it and everything, but I really can't explain why it moved the way that it did. And on Friday was definitely a case. Like I can kind of understand why they might have sold it, although I don't really feel like that the case for selling it was super strong. So I really can't explain why it sold so hard. You know, it's going to be interesting. So somebody was asking earlier, like, what is your thoughts for a bias today? Well, I'm not too sure. On a Monday, Mondays tend to be quieter and tighter, so that makes me less apt to trade on a Monday. But we have tariff stuff, so I am concerned that there could be some selling, trying to hedge over tariffs, although it seems like that the tariffs that we're getting are things that people were already expecting and that the market is not moving on it too much. I'm kind of more worried about Donald Trump comes in and says more. There's also CPI and PPI later this week, although I kind of expect those to be in line, if not light. I'm not expecting a tick up in CPI. If we got a tick up in CPI, I think that would be like that would really roil this market, right? I don't get you job searching thing. Are you not on a full broker? I saw you having 1K days. Well, so those 1K days were trading multiple contracts that I don't think that I would be realistically trading without like, I don't know how many contracts I would want to have. I mean, I should be able to do it with 2,500, right? But I think that if I was really trading 5 contracts, I would probably want at least 5, if not 10. So the video that I want to put out today, I did some Monte Carlo testing to test like the draw, like what is the standard drawdown per contract. And it came out to $5,000 per E-mini contract. So, when you convert that to treasuries and everything else, it's between 10 and 20. If you were trading ZB with no stop, you'd have blown. Dude, every time that I've gone and tried to trade ZB, it didn't work very well. Although, I would note that those times that I was trading ZB, I didn't really understand the whole spread thing yet. So maybe it would be different. Yeah, so, in the video, I only focused on ES, but we can do it here. And I'll show you what I'm talking about. Let's see, I might have to take some kids to school later today, but we'll see. Okay, so I have these, I need to move more into here, but I have random baselines. So these are strategies that like, this is the way that this is just the way that random trading would work. And I can compare, my strategies to random, okay? So I can do on optimization because it has a seed in here, right? So if I set the seed to be 1 to 1,000 or whatever, okay, and it only trades during the most active time of the day, And I have it set here to, where is it? Exit bars, 10 minutes. Let's change that because we normally hold the trade for more like 60 minutes. Okay. So it's going to take one trade a day. It's going to hold it for 60 minutes. It's a random trade. So you're demo trading 62 a tick. No, what are you talking about? Anyways, we'll run this. Oh, you're talking to AJ. I got you. Okay, and I only did this year. I need to go further back. I need to go to 2019. I need to keep all of the results. There we go. There we go. Okay, so then what I'm going to do is it's saved all these results here. I can right click in NinjaTrader and export. And I think I actually was putting them in the RStudio folder. That's the end drawdown. Why only one trade a day? Because on average, I only take one trade a day. Okay, I think that saved it. And I have to remember if I RStudio. Did I not put an S on it? Okay, I think that the column was not named what I want it to be. Good grief. I really hate the way that Microsoft is. They're trying to make things easier, but I really don't think that it does. Apparently, navigating a file structure and saving your own file structure is too complicated for some Gen Z. There we go. I was like, how come it didn't draw the picture? Wait, is it really doing that correct? Oh, but it's because I'm holding it for an hour. Okay, so it's saying... Actually, zoom. There we go. So it's saying under those parameters that the average drawdown was at least 5,000. So it's saying if you're going to trade ZN for 5 years and whatnot, you should have $5,000 per contract. At least. Maybe more than that. So I would want to be using a $25,000 to $50,000 account to be trading the number of contracts that it was. Now, the thing is, you don't have to have that all at once, but yeah. So yeah. And more broadly, you're going to have winning months and losing months and things like that. So it's really not suitable as income. It really isn't. I think well, I mean, you can make money from a prop firm, but again, I wouldn't. I really think that the whole thing is like the amount of drawdown. That's way more than a prop firm is going to give you. Like the prop firm forces you to trade way more aggressive than you should. That's why it's such a bust, in my opinion, because they force you to trade that hot. Because it increases your chances of failing. I'm gonna write this post. Most people who say day trading does not work. I think that most people that say that day trading does work don't have enough experience under their belt to say that. Like one of the things that really irks me is that a lot of the things that people say on this subject don't really hold up to the kind of numbers that you really actually need. Like, their markets are fat-tailed and everything, and with all of the data, with all of the stuff that we get from Nassim Taleb's Fooled by Randomness and everything, before you can say this strategy works or I'm a profitable trader or whatever the deal is, I think that you should have 5 years under your belt. And I've never seen that. I see plenty of people that say 1 to 2 years, but not 5 years. So, and I'm not saying that day trading it's not possible to be successful day trading, but I am very skeptical that you can be successful day trading relying purely on charts. If all you're doing is you're looking at a chart, quite frankly, if all you were doing was looking at order flow and not actually looking at news, anticipating the news, having informational edges, things like that, I really don't see how you would do it. So, because the things that we can pull from the market, technically, and unless you're very quick, those mostly come back to being break even. No one knows who isn't a problem. Well, so I mean, you can look at broker statements, right? Part of the issue here is that, okay, first of all, can you find somebody with 5 years of trading results? Okay, those do exist. I mean, there are some select people that have provided like broker statements, and I've never seen anybody do like an academic study of it. But you know, like there's people on the internet and stuff that have done those things. But then the question is, where is their edge actually coming from, right? For instance, Ross Cameron of Warrior Day Trading was providing monthly statements every month for more than 5 years, as far as I understand, showing his trading. But I don't think that his edge comes from any of the stuff that he talks about. I think that his edge comes from front running his audience, right? So I can say you can front run your audience. That's profitable. Yeah. Right. Now, if somebody had a robot, its average time in a position is 30 minutes. It's a robot. It's trading every day for 5 years, and they could show profits from that robot. Then we would have something, right? But I've never seen that. And in fact, like whenever there are studies like this, for instance, they did this thing where they looked at like literally everybody that put any kind of a position in the Taiwan stock market. They had all of the info from that exchange, and only a very small percentage of the day traders were profitable, and they didn't have any way to go and find who those people were and ask them what they were doing or anything like that. The researchers always kind of guess. They're like, okay, so why might people be doing this? And the guess of researchers is always that they're like insiders. Like maybe these are politicians and government insiders that know stuff. Right? But the reason that this thing is coming up is because you have a guy that's an options quant coming in and pointing out, like, if the market is Brownian motion, then there's no way to make a profit from that. He's absolutely correct. He's absolutely correct. So this whole idea that you're just going to look at a chart and make money from just looking at a chart, I think it's absolutely batshit crazy. Like I think that anybody that really truly understands the market and the math of it and everything would understand that the idea that you can make money day trading from technical analysis is silly. If you're informed, that's a different thing. If you're informed, that's a different thing, right? And now large numbers of people are questioning it. Yeah, what most people call day trading is trading off of charts. I mean, is it this is the thing that I've always said that I've always thought is weird about it. Why is it that the majority of retail traders think that day trading is looking at a chart? Because wouldn't the most basic naive approach to day trading be, what do I know is going on, and trading off of that? Like it doesn't completely make sense to me. No, I think you can factually say that. So it's kind of, so this is one of those cases where it's like, okay, when you're trying to prove something, okay, there might be one case where, okay, can we do X thing, and then you can prove that it doesn't work that way. Like, what would be an example? I don't know. Like you can falsify something in science, right? There's another case though where it's like, okay, this happens a lot in the healthcare, right? You prove there's some sort of process in the body, like you prove that the way that the body takes in nutrients and or the way that it uses a certain nutrient is X, right? And you can prove that, like you can show that it's doing it chemically and all of that, right? But then what you do is you theorize, okay, so based on that should mean that if you do this thing, then it will result in more muscle gain or something like that, right? Okay, so like you have information, and then you create a theory on a secondary theory on that information, right? And what often happens in the healthcare world is that it's very difficult to prove or disprove that secondary thing, right? This is like, because now we have to make a study and we have a bunch of different people and like everybody reacts differently, and how do you control for all of those variables? And so it's really hard to prove some of those things, right? This is very much like that. Okay, the things that we know about the market and everything kind of suggests that you're not going to be successful from day trading purely from the technicals. Though everything that we have says that the market is very statistically efficient. If there is some sort of a technical aberration in the data, then you starting to trade on it affects the market. And in the short term, the market is very, very good at, smoothing all those things out and becoming that Brownian motion. When you get to higher time frames, it's different. But on the short time frame, it's just any kind of thing like that, it gets washed out. So then the theory based on that would be, yes, that you can model short-term market action as essentially Brownian motion. And if the market really is Brownian motion, then you cannot make money from an outright position from it. There's just no mathematical way to do it. Right? So I really do think that day trading purely off of charts is stupid. I really do think that. Every piece of evidence that we has says that trying to trade just off of a chart is stupid. And we would say, can we falsify that? That's the whole thing, is you would have to falsify that. So we would have to create an algorithm that shows profits over a 5-year history in a systematic way, right? Hasn't happened. People have been trying for a really, really long time, by the way. Very, very smart people have been trying to prove that. And nobody can do it. And the academic world is basically figured out that, yeah, you can't do it. And they've moved on to other things. Like, institutional traders don't trade off of a DOM. I don't know. The institutional traders that I talked to did. But again, I would, the edges I know of explicitly that you're getting from reading the DOM are very, very short term. And so I think that the DOM really helps. I think the way that the DOM helps primarily is that it shows you what's actually going on, right? Like, price is not clear enough on what the situation is in there. Once you can see all of the orders and how all of the orders are behaving, then you can kind of explain what the market's doing, right? That does not necessarily predict what's going to happen in the next 30 minutes, though, unfortunately. But in order to make if I have a piece of information, that does predict what's going to happen in the next 30 minutes, and then I combine that with what are the current liquidity conditions, then you really have something, right? So there are two parts. But if all you have is the liquidity conditions, doesn't work, as far as I've seen. Well, you're talking about something completely different. Stopped out. So let's talk options, right? Because if the short-term markets is Brownian motion, then how do you make money from trading? You don't trade outright positions. What you do is you hedge. What you do is you sell options, and then you hedge those options that you hold. And the reason that is profitable is for two reasons. One is that options get mispriced. You're able to, people will buy options from you at a price that doesn't really make sense. And there's lots of different ways to model the options that give you different kinds of ways of pricing it. And so you can make money from your pricing of it. And number two is that the volatility that is realized tends to be less than the volatility that is projected. So people kind of have to project that there's a certain amount of risk out there. And so the options tend to be worth a little bit more, or rather they go for a price that's a little bit more than what they would actually go for if we knew the final thing, right? The final outcome. You have to price in for that uncertainty. Futures do the same thing, actually. Like if you're looking at treasuries, like the forward yields always end up being higher than the actual yields that it goes for. Like if there's going to be an auction, they have like forwards where you can like start buying those treasuries at a higher yield than when they actually happen. And you have to account for that uncertainty. So the forward yields are always, there's a gap between forward yields and the actual yields. Okay. So that this is, or like in futures, like there's always a gap between the price of the future and the price of the actual commodity, right? Part of that is accounting for like the cost of transportation and holding it and all of that sort of thing, right? But another part of it is just the uncertainty of it, right? And so you're taking on risk from other people and you're making money from taking on risk, essentially, right? And that's how they make money. But those are all hedged. So it's different. So yeah, a guy that's like trading, like offering options, Well, I would hope that you're using algorithms for that sort of a thing. And then, yeah, you're probably not going to use a DOM. Like it for options doesn't make sense because there's going to be there's going to be a limit order book for every strike price of the option. How would you look at that? You know, you can't put 100 different DOMs on your screen. That wouldn't make any sense, right? Okay. Yeah, it's probably an Excel spreadsheet. Yep. Yeah, it's gonna be like an Excel spreadsheet. Now, the people that I was talking to, that the traders at the bank that I talked to, they were block traders. So what they do is, somebody wants to buy or sell a large amount of something, they buy or sell it to the block trading desk all in one big transaction, and then the block trading desk turns around and executes it in small little blocks at the market. And if they can execute it more efficiently than the price that they quote to the customer, then they make money. So those people, that's somebody that they're going to come into the treasury futures and they're just going to buy like 60,000 treasuries or something like that, right? And those guys were using a DOM because that's kind of like more an outright position, essentially, right? Probably the people that are most, how do I say, like the professionals, that the way that they trade is going to be the most relevant to us is going to be the commodity traders, right? But those commodity traders, they're usually, they're often trading the basis. So, or not treasuries, I guess. Those guys are usually more like trading wheat, and like they might be actually buying the actual wheat out there and doing all of these sorts of things. So some of those trades end up being more complicated than what we're doing too. But the what you can learn from them, I think, is a little bit more directly applicable to what we're doing. Show me a profitable trader. Is he an insider or luck in general? Because there are laws for illegal trading, and illegal trading works. That's why it's illegal. Well, no. There's a lot of things that people seem to think are illegal that are not. You see, like here's the conundrum. Something that you guys got to understand. This is something that I notice a lot of retail traders will kind of try and argue about, but it's just because they don't really understand the true nature of the game here, right? People think that, well, if somebody in the market has an explicit advantage over everybody else, that's wrong. Why is it that they should be able to have an advantage that I don't have, right? For instance, members of Congress know things that I don't know. It's not fair that that member of Congress gets to know those things and I don't, and that member of Congress can trade on those things and make money from it. That's not fair. Because it's not fair, it should be illegal, right? That's the argument that people make. It's a bullshit argument. The market is not meant to be equal. The market exists purely to facilitate transactions. There has to be a market maker there, and there has to be people that know what's going to happen and want to make money from that information that they have. And in order for them to do that, there has to be a certain amount of noise in the market for them to be able to transact. And it's not equal. If it was equal, the market wouldn't work, right? Like, can you imagine? I'm a farmer. Like, the whole reason that a commodity market exists, you're a farmer, you're selling wheat, you have a wheat crop. Well, you, the farmer, know things about the status of your wheat crop, and you're hedging for those things. You know how much wheat you're planning on getting. You're monitoring it from day to day to see the quality of the wheat and all of these sorts of things. Is that not inside information? But that information is exactly why the market exists. Is because each individual participant in the market has some information that other participants in the market don't have. And they can make money. There's value in them bringing that information into the market and pricing it into the price. Of course, market's not perfectly efficient. So there's big problems with that. But there still needs to be a way to aggregate all that information together and to actually have transactions, right? So you can't say that, oh, if this person has an unfair advantage. No. The market is not intended to be fair. Now, there's a problem with congressmen trading on inside information. The problem is that it's a conflict of interest with what they're supposed to be doing as, stewards of our republic. That's why it should be illegal. But it's not because they have an advantage. Similarly, trading on insider information, like an earnings report, that's illegal because that is information that belongs to the company. Okay. But outside of that, you have information. You not only can you trade on it, you should trade on it. So there's lots of things that people seem to think would be illegal because that would be in like an explicit advantage that aren't actually illegal. And that's one of the reasons why I kind of feel like that retail traders sleep on the greatest edge out there, which is being informed. There is information, all sorts of information out there that is public information that you can get a hold of. And you can trade as a retail trader that's not properly factored into the market. And the only issue with it is that because it's not being factored into the market, you don't necessarily know when it's going to. So you kind of have to have a situation where you can see that it's not priced into the market, but you believe that it will be very soon, right? And then you can make money trading on it. Retail traders are lazy and just want TA. Well, so I think I can think of maybe 3 reasons why I think that technical analysis is so popular. One is psychological. People's minds have basically evolved to search for seasonal patterns. It kind of started with being able to see the patterns in the way that different animals migrate so that you can hunt them and deal with the seasons and deal with like winter and so forth, prepare for winter. Kind of started as things like that. And then, it played a major role in like agriculture and, just as time goes on, that kind of analysis of things in particular, being able to do regression. So like seeing a bunch of data points and seeing that there's a general trend in those data points. We're very, very good at doing like you can look at a chart and, a scatter plot of points and see the regression lines. Something that like for us to do algorithmically is really quite complicated, and humans can just look at it and we can see it. So like doing regression and also like kind of seeing, like looking at a normal distribution and seeing, okay, like we've done this 50 times and most of the time it comes out this way, right? Humans are very good at that. So I think part of it is that our brains just want to do it that way. Like the brain wants to see patterns and think that there's a pattern to the market that they can sort out. Is the first thing. The second thing, though, is that there is like cultural history behind it. When these guys were making money in the 80s, there was a lot of glorifying the floor traders and short-term traders And then in the 2000s, there was a lot of glorifying of the people that had picked up electronic trading and were making money from the electronic trading. So like there was this brief period where there was a lot of retail traders making a ton of money off of, like in the early 2000s before the dot-com bust. These guys were making money hand over fist from day trading electronically. And that what kind of happened after that was that then the robots started to come in and automate them away. And then, that edge has been taken away. So we've all those people then kind of related what they were doing and everything to us. And, they were basically saying, I didn't know what was going on. I was just trading technically. And so we pick it up from that perspective as well. Aren't you looking for pattern DOM behavior as well? Well, yes, but I think that the true edge comes from me knowing something. There's only a few select situations where I will really take a trade based purely off of what I see going on in the DOM. And even those are kind of like situational. Like, so a situation where I might take something based purely off of what I'm seeing on the DOM would be a day when I'm really not expecting there to be any major action. So if I don't have any pieces of information that suggest some sort of large meta order that could be coming through or some sort of bias to the day, I expect that it should be range bound, which normally on a Monday would be today, except for that there's the whole tariff thing. So I'm not confident on that one on this Monday. But like last Monday probably would have been a good example. And then I'm seeing these sorts of clear imbalances. I may take trades then. So like in this situation right now, there is a pretty big iceberg happening at the top of the range, right? And they are kind of breaking out to the upside. So, some people might see that as a situation to go long. But in this particular circumstance, it's tough. In this particular circumstance, I'd be fading it. Actually, you know what? I think we could... Well, it's risky. I can do one contract. I think that in this situation, it's risky because there could be government insiders with information knowing that what Donald Trump is going to say or things that are going to be released today. And there's a very high probability of that happening. Okay. But if that's not, then this would be a very, very good spot to fade it. So like we're right there at the stop out zone. There's a big iceberg there. Yeah, that's going to be a 10K iceberg by the end of it, probably. Now, if I'm wrong, then they're going to stop through that and bust through 10, half, and 11, right? So I think it's a risky trade. But we'll take it for funsies. Oh, you know what? Actually, I don't want to do 5 contracts on that. Let me change that. I'll just, if it lets me. We might just continue through here now. Do you only go long? Oh, no. I'll take longs or shorts. I would say lately I've kind of been favoring longs, which I don't like. I kind of think that I have a bias. Okay, so there it is. It's going through. I also think in this situation that there's a good chance of like seeing the stop out and then it coming back. So that does not necessarily surprise me. Where would I be surprised at? I'm not sure. There's not any kind of spots there on the DOM. But like I said, this is an example of where we don't have an explicit informational edge. So it's a little bit of a crapshoot, right? Like this is going to be more of a 50-50. Yeah. There are definitely patterns. I'm just saying I do not use patterns for entry, one. And two, I do not believe that my edge is explicitly the patterns. Usually when I'm taking a trade and a trade that I really believe in, there is some piece of deeper information. So like, I probably shouldn't tell you guys this, but if I'm sitting there and I haven't really said anything about what I'm thinking about for the bias of the day, and all of a sudden I'm taking a trade, and I'm not saying like, well, this is just kind of like a, you know, a shot in the dark, yada, yada, yada. That probably means that I have a piece of information that I'm not necessarily sharing, right? Usually I'll share after the fact. This one is kind of the opposite trade, which is I'm not expecting a large meta order, and it's at a spot where I would expect it to mean revert. So this one is experimental, essentially. Like, we have a theory that we should be able to take advantage of it in this way, but every time that I've tried trading against the market maker like that, it doesn't work out. So we'll see. Came really close to letting me reduce my position there, but it didn't do it, did it? I would say, though, that it broke through the iceberg, and it's been relatively thick. So I think that still kind of supports a sell. But it is, well, I don't know. I think the in this situation, the reason part of why I'm so skeptical of it, I don't think that if we were having this discussion that I would have taken this. But I was like, sure, it's a good example. There is a trend in the cumulative delta, right? So it's coming to that line there. That's why I'm interested in it. I'm not, seeing anything that clearly says to me that we're getting a, like why this would be happening. This is relatively gentle too. So I think in this situation, it's worth a shot. It's not ideal though. Let's put it that way. It's definitely not ideal. How do you recognize icebergs? Well, I mean, the main thing that will help you see an iceberg is when you look at that inside price and it's like more than 3,000, right? If it takes more than 3,000 contracts to push a price through in the treasuries, then that's an iceberg. And a 10,000 order iceberg is relatively large. Like, I think that the largest we've ever seen in regular action is like 15K. You can see like 30Ks going into the closes and things like that. But under normal circumstances, you're not going to see more than 15K. I'm thinking that, if I had only taken one, then I could be like, whatever. But since it didn't, I'm going to see if it lets me out on the limit. So far, it doesn't look like you're getting a lot of buy orders, so I'm just going to take that off and consider it a mistake. Misclick. Because I really would only want to be a short one contract. Come on. There we go. Okay. Man, it's when you're seeing cumulative delta go in one way, I don't like to do that, right? Like the patterns, what I'm looking for is I expect it to go in a certain direction, and I can see that the cumulative delta is going in that direction and rather consistently. And I'd say that this qualifies, but I'm not necessarily expecting it to move up today. Right. And then I will also look on the DOM for, like an iceberg is a good place. Like if I'm looking to buy and I see an iceberg there, that's kind of like, okay, I'm probably not going to get a better price than that anytime soon. I'll take it. That sort of a thing. So I'll try and optimize my trades based off of the DOM. But I'm primarily looking to be the informed trader. Because if you just say, here's this DOM pattern, and when you see this DOM pattern, take the trade with this set risk reward, I'm just telling you that doesn't work. I tried that for a really, really long time, and I couldn't get it to work. I can break even doing that, but I can't get it to work. It wasn't until I really started focusing on knowing what's going on in the market that I started to get runs where, I'll go several months, if not a year, where it's just like I win every time, right? So now the huge hurdle to jump over in that situation with that framework now is how well do you understand that current market? How well do you understand that current market? That's probably the biggest barrier to your success then, is that you don't understand that market and how much money are you going to lose while you're trying to figure it out, right? So I don't think that I understood Friday's market. Why should I understand today's market? Although I do think we probably understand today's market. They're probably moving up just on mean reversion. That's my guess. So you speak as if the DOM order flow is the secret sauce. Oh, well, I don't really think that it is the secret sauce. But I think that DOM order flow is like one of the most beneficial things that I can teach people, because there is a lot of really proven behaviors in the order flow. So when you go and you start looking at the market statistically, and you look at price in particular, price in short time frames, there's just not, there's nothing to pull out there. It's random. It's very statistically efficient. But when you look at the order flow, that's when you really start to find all of these stylized behaviors. Okay. So the big one is that there's strong autocorrelation in the order sign. So when I talk about signing orders, I'm saying looking at the orders that come through and determining which side is which market order, which side it is. Man, I totally screwed that up. Signing orders means look at every market order that comes in and determine whether it was a market buy or a market sell. So if it is a market buy, and then I come back an hour later and I pick another random order, it's 0.5% chance higher to also be a market buy. So there's these trends with a long memory where if it's going up, an hour later, it will probably also be going up. And we believe, or we have pretty strong reason to believe, that this is caused by really, really big buyers and sellers executing over a long period of time. Okay. So that's one thing that we know for sure exists. And, there's other things that you can kind of get into. But the order flow is where the well-proven kind of strange aberrations in the market exist, right? Now, the thing is that because those things are structural, because those things are structural, they're always going to be there. There's always going to be an opportunity to make money from them. The problem is that there's going to be competition for them. Problem is that there's going to be competition for them. So you might not be able to take advantage of it, but you don't want to trade against it, right? So I kind of look at, so if I was to look at hierarchy of things, okay, 1 minute / 5 minute TA useless. Okay. Oh. Why is it doing that? Let's try that again. Useless. Okay. 1 day momentum slight edge. Okay. Momentum, from the perspective that we look at, you know, doesn't really work because you have to have like a wide variety of assets and everything. There is a tendency for markets to trend over long periods. So you can use momentum and like moving averages spots. That's why I call it momentum, is, you know, I guess it's a technical analysis, but I kind of am using that to differentiate between like using moving averages and like new 50-day highs and lows compared to like head and shoulders. Okay. Head and shoulders, as far as I can tell, it's not really useful. Okay. Then we get to order flow. And that's what I would call a base. That is that if you trade off of it, that will get you to break even. But deriving an explicit edge from it, super, super hard. If you were using order flow and you're doing algorithms, your algorithmic trading, then I think that there's an edge there. Okay. I think that there's still some small edges in the order flow and so forth that you might be able to take advantage of algorithmically. Okay. Okay, informed trading has an inconsistent edge. Which is to say, there's really some strong edge there, but you kind of have to, you're trading on something that the market's not picking up on, and then the market has to pick up on it and start to price it. And you're not going to be the one to make that happen because you're just that one teeny tiny little order, right? So sometimes you really have an edge and it just doesn't play out, right? So this is why I call it inconsistent edge. So that's kind of the hierarchy as I look at it, right? So that means that these three things are things that you want to look at. These are things that you want to look at. I just have to be very clear that you can't just go and look at only this thing and expect to be profitable from it. Look at only order flow and be profitable from it, right? You combine everything that we know that has a slight edge together, and then you can get something that's pretty darn good. And then there's one last thing, and that is risk taking, right? Okay. This has edge, but is very fat-tailed. right? So you kind of have to rely on the informed trading giving you enough information to know when you really shouldn't take the risks, right? Okay. When you combine all these things together, then with the risk taking, that's when you can really make some serious money from it. But I would still say it's probably not suitable as monthly income. Hold on. Okay, so just bring him here. I guess one of the babies is awake and my wife is leaving, so I'm gonna have to watch him. The Ninja Trader 8 Super DOM can be customized to have the same data Jigsaw DOM has, maybe less beautiful, but it's free with the same data. Yes. So I have not checked on that in a long time. In theory, it should be able to do it, but last I checked, it didn't have all of it. My big complaint with the Ninja Trader DOM is twofold. Number one, there's too much empty space in it. So it's not very space efficient. That's my really, really big problem with it. It's like to have all of that information on there, it's going to take up like twice as much room as the Jigsaw DOM. And the other one that bothers me is the way that you enter orders on it. Like, I think one of the big advantages to the Jigsaw DOM is just the ease of, one click, one order. Depending on where you click, it submits a different type of order. It knows exactly what you want to do. Other DOMs don't do that. That's the biggest difference. I like trying to go over to like the Sierra Charts DOM or the Ninja Trader DOM. That's the thing that bothers me the most. What's your opinion on using very tight stops like John Grady does? I don't know. So one of the things is that I didn't realize or know that John Grady did that when I first started and when I was really, really doing those sorts of things. I've never tried doing it myself. I'm kind of the opinion that that would really cut things short. But I haven't tried it, so I don't really know. I like more broadly, I think that John Grady does a really good job of like explaining what's going on in the DOM and some of the things that you're doing. And then he says, well, it's context, right? You have to know the context. Like there's these two signals and they kind of contradict each other. And you have to use the context to know which one is the correct signal, right? Which is essentially another way of saying what I had said earlier, which is that you have to be the informed trader. But I've never, I don't think he's ever shown us how well he does with it. I'm going to bet that he does pretty good most of the time, but every once in a while has some screw ups, and that, if you were to look at a 5-year history, you would probably be a little bit like, well, I don't think I would want to live off of that. Probably. It's my guess. Okay, so if you're losing money, why would I want your advice? So, well, first of all, I've actually been trading really well lately. But what you should be following is empirical evidence, right? Like, why would you follow any? Let me tell you what, man. I can't tell you how many people there are out there that. So we know that the failure rate for futures traders is like 90%, right? Okay, if you go on Reddit, there's not 90% of people claiming to be failing. Okay. Like, it's really annoying. Most retail traders think that they're successful. So somebody claiming to be profitable is not a good reason to be trading. Okay, hold on. Hold on a second. I got to bring it back over to here. How do I do that? Now playing view. No. This computer. There we go. Yeah, but listening to people who lose money is valuable, if not more, than listening to people who make money. Well, there is a bit of the survivor bias in it, right? like a part of the issue is the seeing what the people that are successful aren't doing that everybody else is doing that allows them to survive. Which is essentially don't take huge risks. That's why I'm still around, right? Yeah, you spend enough time in the retail trading world, all you're talking to is people who lose money. Yeah, it's true. They're better at lying. Well, then I don't think that they're lying. I think that they're lying to themselves, maybe. Or they just don't understand the statistics of it, right? Like, by and large, what I've discovered is that if a retail trader has a profitable month, they immediately put themselves into the I'm profitable column. Right? The reason that I'm so much more cautious about that is because my standard is 5 years. So I don't have 5 years of profitability under my belt. I have like 1 year. I have 1 year where I was profitable. So like most people, they would say I've made it, and then they would go around and market themselves as a profitable trader. And there are people on YouTube that have done that, right? I don't do that. I've had more success than a lot of these people that go out there and market themselves as profitable traders. But I say it should be 5 years. So yeah, like everyone trying to bag that 1 month so they can start a YouTube. Yeah, exactly. Well, I mean, the funny thing about it is that I really didn't intend to start a channel like this. Like, I really didn't. At first it was, I wanted to stream was the thing. Like, streaming was the thing, and I had kind of messed around with streaming video games. So I was messing around with the software, and then they had a contest, and I really wanted the Ninja Trader license that was going to be for the contest. So I entered into the contest because I was like, oh, I know how to do this, and I can win the Ninja Trader. So that's what I did. And what happened was, I was the only person that entered the contest. Like, back then in 2017, nobody wanted to do this. It's so weird. Nobody cared about day trading, certainly not futures trading, and certainly not putting it on YouTube live. And now, 7-8 years later, it seems like everybody wants to do that, right? But kind of what happened was, so many people subscribed that I was like, okay, well, let's just keep doing this as long as I'm trading. And then what happened was, YouTube switched things so that I could live stream it, because in the beginning I couldn't live stream it. And the first live stream was for Bitcoin, the Bitcoin futures going live. So 2017. And when I did that stream and people could ask me questions live, all of a sudden I realized that all the information that I had known from just reading and gathering information on markets for over a decade at that point, and from working at a bank and everything, I knew a lot about how this stuff worked that retail traders didn't know. So I just started going with it. And I think part of the reason why I came out to the way that I did was that something that happened to me was very early on, I had a strong success. Like, I had a 3-month period or so where I was just making money hand over foot. And every trade was working just amazing. It was so crazy. And then as soon as I was like, okay, it was like sim trading and stuff. And no, it was, I think there was a portion of that was live. There was like a good month or two that it was live. But like, as soon as I started trying to size it up, it was like I lost every time. And I remember that summer in particular, because I hadn't really experienced the summer before. That summer in particular, it was like I lost literally every trade. It was like literally every trade. And that's when I started to think about some of the stuff that I had learned and everything. I was like, I know that, like, Nassim Taleb says that markets are fat-tailed and this and this and that. But it didn't dawn on me that he was talking about like tens of thousands of trades, right? And once I started doing the back testing and all of the math for myself and everything, and I realized that like, oh, the industry standard is 5 years, and it's 5 years for a reason, and all these sorts. This is when I kind of shifted up and was like, oh, okay. And so then we just started look, what can we find? So I had a friend that was back testing a lot of stuff, and then we came upon the research. And two things kind of happened with the research. One was, well, three things. One was that I started trading more on informational inefficiencies at that time, like trading the news. So that really helped. I was a lot better after that. But then the number two thing was, there's like empirical evidence for this. So we can use that in our trading. But then the third thing that happened, and I think the most important, was that I realized that there was actually some really profound societal consequences. And so that's when we kind of started shifting our content up. I made a bunch of videos that were, okay, I'm going to share with you the empirically proven information that we have about the DOM and order flow, and getting everything to, where we can really give you a good education. That's why I think if you watch my order flow video series, that's the best source of order flow trading information on the internet, in my opinion, because it's empirically based. You watch that stuff, and then you come and you watch the DOM, and you kind of build that intuition for how the market's moving, right? You do a lot better. You'll get there a lot faster. Now I'm kind of in this limbo zone where it's like, I want to push this information and help people understand the market, why it moves the way that it does, and why it being not efficient is kind of an important thing for us to realize. But I'm not sure how I do that without you making money hand over fist, or telling people that you're making money hand over fist, right? And so now it's like, how do you attract people's attention and get the following? Because most retail traders don't want good content. They want to see somebody making a ton of money and sell them this delusion that they're going to become a millionaire from day trading, and you're not. Why do you want to? What is the reason? Well, so we have this idea that the market is efficient, and because of that, we give the market a significant amount of deference. Like if a company is trying to make a decision, they will be like, oh, okay, let's put a trial balloon out and see how the market reacts to it. And the way that the market reacts to it determines what they will do. Or there'd be these things where it's like, well, we're having issues with our stock price. We know if we announce layoffs that the market might reward us for that. So they do that, and they'll fire all of these people that are really a key part of how that company works. And, like Boeing is probably the perfect example of this. Boeing had a really strong engineering culture where they really made sure to do everything correctly. And then these guys came in, were like, well, we need to boost that stock price, and they completely shifted it. And now Boeing is trash, and they've had all of these issues because of it. And this is a perfect example of why did that happen? It's because the market is not perfectly efficient, but we all assume that it is. Right? The consequence of the market not being perfectly efficient is that sometimes we need to do things because we understand that that's the correct way to do it, and to make correct decisions, and we have to ignore what the market is saying. That's I mean, that's the real societal consequence of it. People will say, and there's still people in academia that, argue about market efficiency, and they say, well, the market is efficient enough. Well, but I say for those people that are on Boeing flights that had issues, market was not efficient enough. You know, there's just all sorts of consequences. People getting laid off, etc., etc. Many of the biggest problems that we have in Western society today stem from the fact that we believe that the market is perfectly efficient when it's not. So that's why I want to get that message out. Like, I really, another side of it is that it is kind of my YouTube edge. Like, I believe that 50 years from now, that this group of researchers, I don't think that I could point to any one. It's not like with Keynes, where one guy was just such a big genius. There's a couple of different people involved. Okay, but these guys that are involved in complexity economics and econophysics and the order flow view of markets, I really think someday that they will be viewed in the same kind of reverence as the Keynesian revolution, the beginning of the last century. And I want to be one of the people that's getting it out to the public conscious, because nobody else is really talking about it. It was why bringing this whole subject up, part of the reason that I liked what I was seeing was because there was finally somebody else out there showing people this stuff. He was kind of more interested in the options, but he understood market impact and how that kind of results in the market being really statistically efficient in the short term. I don't know if he understood that it makes the market very informationally inefficient in the long run, but it's a step in the right direction. And I kind of wonder sometimes, is it just me? Maybe it really is just me that, you know, certain things about me, like you're not memorable, you're an old white guy, but, you know, I just not able to get the attention, right? And my audience is going to be day traders, are all going to be largely going to be people that have already been sold themselves on the delusion that they're going to become millionaire day traders. So you want to be innovator. Yeah, I think that information is something I can provide on YouTube, that because if all of a sudden the public conversation about that picked up, the videos on my channel should be the ones that should be coming to the top of searches for that stuff. So it is part of the edge. It's just the problem is that people aren't interested in it yet. I'm too far ahead of the game, I guess. Although I would say my YouTube channel has done way better than I ever thought it would. But it's kind of turned into... Well, you know what? I think this past week, I kind of came to... I don't think that the YouTube channel is going to get big enough for me to live off of the income of that before the end of March. I don't think it's going to happen. And maybe part of why I think that is because I got so many people last week reach out to me. So... like it seems like hiring is picking up. So I'm a lot more hopeful about this next round of stuff. Because I got a good number on deck in here, and then there's a bunch of others that I need to apply to, so. Kanye's online storefront is legit only selling a white t-shirt. What? I'm sure it probably will be. My gosh, I know. So over the beginning of the weekend, Kanye went on this like crazy racist rant on Twitter. And I didn't read the whole thing. I'm just kind of like, I don't care about Kanye anymore, man. Come on, just stop. I just get back to this thing where it's like I feel like that everybody is experiencing mass hysteria all the time, you know. Are they breaking highs again? Oh yeah, they did. Your long-term trading returns are better than your short-term, so why trade other than YouTube fame? Oh, well, so actually there's a couple of reasons for that. I think the primary thing is that I get so much from the community here, man. Like, part of my edge is running the stream and all of the information that you guys feed me. Like, I wouldn't have found this book, Trades, Quotes, and Prices, that kind of keyed me on to all of this stuff. Because, you know, the thing is that these guys that wrote this book, they're just researchers. And I you know, I'm kind of the one that's like reading it and going, oh, here's how it applies to us. Here's why it's actually, this is really culturally significant. The researchers, they understand that too, but they're not, they don't have the experience doing YouTube and things like that, right? So I get to be the one that brings it to you. But I only found that book because somebody here on the stream recommended it, right? And people will share, you know, information all the time that helps us. So that's part of it. I also get a lot just from talking to people. Like I think that I would probably get depressed really, really quickly if I didn't have the stream to talk to every day. But another component of this is that what I do with the day trading very much informs my longer term trades. So the longer term trades that I've done, like investments, and I've made some swing trades in oil that did really well. I did, you know, some trades on rare earth minerals that has done good at points, although I think that I have a lot more to learn in that spot because I didn't really get the profits out of it that I should have. Still an ongoing trade though. You know, sitting on the front lines is really valuable. And that helps me make those bigger trades. So there might be some point where, like, if I'm really making tons of money from the swing trades, you know, I'll still be here on the front line trying to sort out the market minute by minute. Okay, are they... I can hear the boys. Okay. I think I gotta go check on him. I'll be right back. Forgot I was muted. I do make some trendy YouTube stuff, but any time that I really try to break out with the YouTube, it doesn't last. I don't know. Like the thing that's frustrating about it is that I have had videos that have gone off and things like that, but for some reason it doesn't lead to lasting success. I mean, well, let's not say lasting. I mean, 16,000 YouTube subscribers is really successful. Like that puts me in like the top 1% or something like that. But it's just not enough to live on. And the whole issue is that we would really like to be able to just make content, you know? Wow, Philip Morris is up 40% in the last 12 months, really. That's not bad. Oh, you got the Kinder Morgan? Wait, they're up 53%? Really? I don't know about that. That one's not necessarily as big of a deal. I don't know. Like the whole market overall was up 30% last year, right? So it just means a little bit of an outperformance. It's not like a, oh my gosh, that's crazy. That would be like Nvidia. Nvidia was up huge last year. But under normal circumstances, 63% is like crazy. I don't know why. Yesterday, Ethan went to sleep super early, and he woke up super early, and he's like really active. It's just him over there in the room. I'm watching him. He's jumping around. Yeah, you've been in KMI. Mine's not nearly as good as Uzi's. Oh, my mind's blank here. What am I searching for? There we go. That took me really hard to remember. What's with that? GameStop to the moon. Oh, please, no. I'm so sick of that. The thing that frustrates me so much about the game, because we had some initial, like, the stream popped off a little bit when that GameStop thing hit. And again, it's like nobody stuck around and actually learned about the markets, and instead everybody like joined this cult, became this cult, and so it didn't actually result in better knowledge and understanding of markets. I think it made things worse. So I really hate the way that the whole GameStop thing turned out. Did they make another move? Well, I'm sure that it will always kind of do things like that. There's some cray-cray going on over there, but... I don't know how to show you guys this without, okay, hold on. Gonna come over to here. I'm gonna pull it over here. Oh wait, what do I actually part do I want to look at? Oh, here we are. Oh, no, cool, we can do this. Okay. Make this black. Make it way bigger than that. There we go. Okay, now I can show you. Here's my larger account. So, I guess the goal for this one should be to get it to 15K, huh? For a long time, I was, wanted it to be over 6 or 7 or whatever, and then it just like exploded. It was like, whoa, what the? 44.95% return over the year, over the past year, compared to the S&P only up 22%. So I outperformed by double. That's not bad, but I have high beta and stuff like that in there, so. Should be more. Not bad. Not bad, right? I think Uzi has more positions than I do. Oh, I need to add like 2 or 3 positions. Add more money into it. I thought that I would be adding tons of money into it right now, and it didn't turn out that way. Yeah. Oh, but yeah, there's probably more money overall too, yeah. But I just, like, I only have, like, how many positions do I have? I still have the silver. I screwed up big time on that one, because I think something happened, and they like, diluted me or something. That's one of the things that I've had not dealt with very well. I still got the TLT. I'm doing good on my rare earth elements. Goldman is good. Most of the returns come from the Goldman. If I just only held the Goldman, that's up 350% since I've held it, but I've held it for a long time. Oh, and my Berkshire is up 51% since I got it? Well. Yeah, see, I didn't... when we were having that whole conversation, because I was tempted on the AT&T. Wait, so how much is AT&T up? Let's come over here. Because basically what I did was I saw Warren Buffett buy AT&T, and I was like, well, why don't I just buy Warren Buffett instead of buying... Because he's buying everything that I'm interested in right now, so let's just use him. Let's see if we can do that. So I'll put on T. Here's a chart of AT&T. We'll go to a 1-day chart. Okay. We're going back to when AT&T was bought, was right here. And then I think I can push this plus button. Yeah, there we go. And do BRK. Berkshire Hathaway. Oh, wait. That's not... Why is it TSX? There we go. BRK. Oh, which one is it? B. Same percentage scale. Oh, baby. Look at that. I think I made the right call, guys. I think I made the right call. Okay, but Uzi, you bought it much later than that, right? When did you buy it, Uzi? I think you were doing T in 2023, maybe down here. Oh, you've been accumulating it since 2019. Well, I don't know. Maybe you should have followed my boy Buffett then. Over the last year, though, it's outperformed. Well, only since September. By about, what, 17%? If only you could have just bought right here. You were in before Buffett. That's what I was saying. Like, if I go back to 2019, so I didn't pick a specific spot. I just, here's 2019, right? So you can see that there for the first year, AT&T outperformed. And then from about the point that Warren Buffett bought AT&T, Warren Buffett's been performing better than AT&T. But if I change this headline one to ES futures, yeah. And I bought it again afterwards. So like somewhere in here-ish. Oh, maybe he has been outperforming. I was going to say there's been a lot of spots where Buffett has been underperforming the S&P 500. I really think there's so much going back and forth about, is Buffett, like, is his edge washed out and whatnot. But in your IRA, okay, why not Berkshire Hathaway shares instead of S&P 500 index shares? That's kind of been my approach. But Buffett's edge is quarterly revenue, maybe. Oh, you talking about like dividends? I don't remember what their dividend is, but I think that I could do amazingly. Oh well, wait, what? Oh. I've missed that. I haven't looked at it in a month. I'm like, because we were right here. Over here, I was like, I need to buy more. Oh, I'd be up 3 times if I had done that. Oh my gosh, guys, I'm so dumb. No, I'm not so dumb. It's just, I lost my job. Otherwise, I think I would have. I wanted to put more money in and put like 500 more into REMF. Okay, well, whatever. What's going on over there then? Let's go look. Finance, Yahoo. Are they like doing well since Donald Trump became president? Because he's talking about expanding into rare earth resources. Oh, rare element resources provides rare earth demonstration plant update 12 days ago. In case it wasn't clear, I own this stock. Okay. Littleton, Colorado, Rare Earth Element Resources is pleased to provide this progress update on the company's rare earth processing and separation demonstration plant in Upton, Wyoming. The demonstration plant, which has been designated and constructed to advance the company's proprietary processing and separation technology, has progressed through the equipment shakedown process and is in the final stages of commissioning. The initial phase of production is expected by the end of the first quarter of 2025. The demonstration plant, utilizing innovative and proprietary processing and separation technology, is expected to generate the operational and economic data necessary for the design of a commercial scale plant. We have navigated the equipment shakedown process, which commenced in the fourth quarter. We've gained key operating criteria for the upcoming implementation of our proprietary process, stated Jay Pickhartz, the company's chief operating officer. With the Bear Lodge feed material prepared and stockpiled, permitting and licensing completed, and the initial staffing by our Wyoming-based operations labor contractor mobilized and trained, we look forward to commencing our phased approach to the full extraction and separation processing. The progress of the company plant comes at a time when the newly inaugurated federal administration has announced an enhanced focus on critical minerals and rare earths. On January 20th, 2025, one day after his inauguration, President Trump issued the Unleashing American Energy Executive Order, which included several urgent critical mineral and rare earth directives, including the immediate review of all agency actions that potentially burden the development of domestic energy resources, with particular attention to critical minerals. Directing the security of energy to ensure that critical mineral projects, including the processing of critical minerals, receive consideration for federal support. Directing the Secretary of Defense to consider the needs of U.S. in supplying and maintaining national defense stockpile to provide robust security of critical minerals. And establishing the U.S. position as the leading producer and processor of rare earth minerals, which will create jobs and prosperity at home, strengthen supply chains for the U.S. and its allies, and reduce the global influence of malign and adversarial states. Okay, but so then the issue is are they going to dilute again? But every time that they do that, I just have to put more money in, and I wasn't paying enough attention. I missed a message that would have, See, that was my mistake there. If I come back to community, is it that dork that was shorting it still there? I used to come in here and read this like every week, and there was this one guy that was incessantly posting with his shorts, trying to scare everybody out of it. And I'm like, you know what? You wouldn't be posting it all if you were that confident in it. Upside is 10x. That would be cool. This is looking like a pump and dump. Yeah, it could come back down. I wouldn't be surprised, actually. A lot more activity in this, though. Interesting. Well, cool. If I was getting 20 million a year in dividends, I wouldn't care what the price was. It's definitely going to be a focus when I get another job, is to try and fill that out a little bit better. So lucky that we had pretty much gotten most of the debts out of the way. So it was to the point where I was going to start putting more money in those accounts. But the Treasury is going to go for more today. Oh, they have some room. I tell you what, over here on this one, It's really hard for them to stay above that line. It really is. But this time they just went sideways. It didn't revert back down. Yeah. I think when I tried taking that trade, it should have only been a one contract, so I lost 2 ticks on it, something like that. That's okay. But against that trend, that's probably not a good trade. Yeah. I don't think I think I should probably put that one as a mistake, like me not really trading the way that I should, rather than I did everything right and was wrong. I think that I didn't consider the trend enough when I did that. I took a trade because I just wanted to show people, what was going on and how I was looking at it. What's up with people trying to say conservatives didn't like the halftime show? Okay, wow. That's on Reddit. A bunch of conservative commentators commented on the halftime show and said that they didn't like it. The media is trying to turn it into that they must be racist or something like that. But I really think that it's really more about just criticizing popular culture in general. Like, for example, how many of you can remember who did the halftime show last year? I can't even remember. It wasn't very good. And we went through this last year too, and like everybody on Reddit was like, it was the greatest halftime show. I'm like, because they're all trying to glaze it, right? It's probably bots, frankly. You can become a millionaire counter trading stuff? No, probably not. I wouldn't recommend counter trading stuff. The best trades that I have ever made were always when somebody came on stream and was like, I'm going to take a position against you. And I was like, okay, go ahead. I really believe in this one. And they get slaughtered. I think the best one. Oh, I wish I had written this date down, because there was this one guy that really came in like, I think that only reason he came into the stream was to try and promote his own thing. He had like a trading room and all this crap. He's like, oh, I'm going to take this position against you. And oh my gosh, like that ended up being like the strongest trend day all year. And he like doubled down on it. So like he had started a trading room and everything, and then doubled down and blew the account. And and we never heard from him again. That was probably the best example. And I don't know when that happened, but it's somewhere back there in the history. The best trade of the week will be when Trump puts tariffs on Uzi. Well, I'd say that the markets are handling that weekend news pretty well so far. I don't know. Ethan's doing good there, watching the TV. I'm really getting hopeful that we're past the toddler stage. I tell you what, Asher's changing too. Like, now, Asher seems to me like a hyperactive 5-year-old. Not an autistic 5-year-old. It's like a hyperactive 5-year-old that just can't talk. Like, he understands everything that I'm saying. He just can't use words. I kind of have hope that with speech therapy that they can get him to talk, because I think that he just can't figure out how to make the sounds correctly with his mouth. Oh, I forgot to clean up all this nonsense in Discord because somebody was spamming. They were insulting each other's mothers, I guess. There's this way of teaching, so I'm curious to see if it works in these situations, but I don't know your situation. But have you tried making sounds with them or repeating slowly and turning it into real words? Yeah. So one of the interesting things is that, like, I've pulled people up on YouTube. So, like, there's this one lady on YouTube and she has, like, this mouth and she shows, like, where the tongue is supposed to be and everything. And so I can show him those and he can do it. So I think that I could probably get him to make all of the sounds with a bit of work, but then trying to combine the sounds together, he just completely fails. Like, if I'm trying to get him to say P, you know, go like pa, 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 and then E, and he can do both of those, but then when he tries to combine them together, it just goes pa, pa, ah, you know, so I don't know what the deal there is. But he can use so he never uses this little, what is it called, AAC? Yeah, augmentative and alternative communication device. He can use the AAC device to communicate, like, he never uses it at home. But at church, he took it with him to church, and the teacher said that he used it to ask them for water. So. So I'm kind of getting this. So I was doing, so the reason this come up, actually, why did this come up? I don't remember why we were thinking about it, but, oh no, I know what it was. Okay, so there's this movie called The Accountant, and it has Anna Kendrick and what's the name of the guy? Ben. Isn't it Ben? Benny? I forget what his name is. Ben Affleck. That's right. Starring Ben Affleck. And the premise of the show is basically this guy, he's autistic and he does accounting, but like accounting where they want to kill you, and so he's like a well-trained killer, etc., etc. I think that the movie was like actually kind of poor. Like, there was parts about it that like just didn't fit. Like, the whole thing was like they're trying to say that he's autistic and he just didn't seem autistic. Ben Affleck just did not do a good job playing an autistic person. So, and an autistic person doing all of that and everything just doesn't fit. It was like the writers didn't understand autism. But there was some good parts about it. Anyways, and in that show, they're like at this home, and the guy is like, oh, the reason that I started this school was because my daughter had problems, and the daughter doesn't speak, but the daughter could like type and was talking to him with typing. And I'm watching this show and I'm like, well, there's so much other bullshit. Oh, by the way, that 10-year the 2-year really spiked there. I don't know what's going on there. They're pushing some big liquidity. I think we're gonna have another big explosion here. Anyways, so I'm like, there's so much other BS in this show. Is that like really a thing? So then I went and started searching for it, and I found some threads on Reddit that were basically like posts from people that were nonverbal autistic. So apparently there are nonverbal autistic people out there that they can write and post things on the internet and talk about that they're nonverbal, but they can't speak. And they don't really understand why. There's just something with the brain processing that like they can't turn it into actual speech for some reason. It could be multiple different reasons, but it's like they don't have the correct motor control, but they can still type. And so that kind of got me into the thinking, is that what Asher is? Because he's starting to catch up on other factors, and it's just the speech that's a problem. Speech and like insane hyperactivity. Hyperactivity and stimulating. Well, so another thing I haven't noticed is that it's really thick. So do you see this over here, the resting orders? Like the overall amount of resting orders has very consistently been like that all morning. That's important. And I bet if we looked at them like separated instead of the difference, that you'd see both of them were increasing, and this one just increased more. And we're hitting 55 on the market, or yeah. So it's kind of giving me signs that it could trend all day. I don't know if now is a very good place to buy it, because like it just kind of broke out, so it's probably likely to come back a little bit. But it seems like it could be a trend day here. Perhaps, well, let's see here. Where are we on the chart, relatively speaking? It could still just be a mean reversion play, right? But this, I would probably bet 16 is probably like the upside target. There is a good spot to look at, is like a benchmark. Oh, and we're seeing it in the Japanese yen. I see. Interesting. The Japanese yen going up. Why would that? Because isn't Japan where a lot of those metals come from? Wouldn't tariffs hurt the Japanese yen? Must be something else going on that I don't completely know. Yeah, the Japan Prime Minister met Trump a few days ago. It sounded like that, and they were saying it was like popular and stuff. Nippon Steel is no longer buying. Oh yeah, that's true too. I feel like I'm missing something that would make it so that would explain the Japanese yen going up explicitly, though. Man, that guy that lost 8,000 bitcoins is still looking for it, huh? I don't know, but I would be really careful about shorting that thing, to be honest with you. I mean, if I guess could it happen? What could it happen? It could go back to '08, but we've been getting a pretty persistent upside trend. Like there's definitely something going on that we are not on the in about, right? And treasuries are like a freight train. Like it's really hard to reverse them when they're doing that. Why is Kanye so batshit? What happened to him? Good question. Like I think a year ago he was kind of saying controversial things that I think that a lot of Donald Trump supporters would be kind of like, well, you know, like leave him alone, he's okay. But now he's really starting to like jump off the deep end, in my opinion. Like Kanye West refuses to take medications because he thinks it messes with his creativity. Every time his ex-wife got sick of it and tried to make him see a doctor, he'd lose his shit and be all over social media saying she was trying to kill him. That's why she eventually divorced him and took the kids out of that mess. Oh. Kanye is a poster boy for what unmedicated bipolar looks like, and the only reason it hasn't completely destroyed his life is because he's rich and surrounded by. But I can totally understand him not wanting to be medicated, though. So then my kind of question is there a way to create an environment that can accommodate him not taking his meds and being crazy? All right, well, would like to stick around, but it looks like the other child is up. So I will see you guys tomorrow. In the meantime, stay excellent.